Hey everyone, welcome back to Watch Your Six. I'm Jason Edwards. We're glad to have you here. And before we get into our guests that we have in studio, I wanted to highlight, remember, with our show, we always want to talk about different aspects of things that maybe you don't look at. And a lot of times we talk about finance, but one of the other areas that we find intriguing is the entrepreneurship. Those individuals out there that might be listening that are considering opening up their business, they've always had this great idea. They have a thought where they feel they can do it better. And we encourage that. But again, with the premise of our show of Watch Your Six, there are so many blind spots to an entrepreneur, and more specifically to starting a small business. There's capitalization, there's liability, it's a litigious field, there's competition, the list goes on and on. So from time to time, we're going to have guests in the studio that are going to help you sort of visualize how a small business can become successful. And we're going to pick their brain and let them share some of their real life data with you. So that way you can consider that when starting a small business. Now, before we get into our discussion, one thing I always say to people is have a plan. You hear us say that a lot. One of the main things I notice with small businesses is they don't do a thing called a pro forma. And that may be foreign to you, but basically it's a fiscal projection of what your business is going to look like. A lot of great ideas have died very quickly because they were undercapitalized. They didn't have enough cash. They became sort of a shoestring, bootstrings type scenario where they had to liquidate things to just keep alive. So make sure when you start down this road, you do some proper planning. So for our conversation today, we have Tim from Wine Markets in Orlando. Tim, nice to have you.
Thank you.
And we're going to get into it with Tim because Tim has a very successful business model. He's about 30 years, right?
30 years last October.
Congratulations.
Thank you.
And what we're hoping to do is gather or glean some information from Tim in our conversation that'll help you as a business owner, or maybe someone who's listening in on the show and says, I'm thinking about this great idea. I'm going to start into that. So Tim, with the first question I really have is take us back to the beginning. So when you started, as you shared with me previously before we got on air, there were other areas, sectors that you're in.
Sure.
But you found yourself levitating to the sector, and he's actually in the wine sector now. But take me back to where you were mentally and what made you say, I think I can run this business successfully.
So I had a pretty good experience, 5 years out of college, working for two other people. And I always say that those two people gave me the yin and yang of proper business. Mm-hmm. My first boss out of college was a great buyer. He loved wine. He was super passionate, but he was an absolutely terrible businessman. And he was the manager of a business that was owned by somebody else remotely. And they weren't particularly straight with each other financially. As a result, the business was woefully underfunded from the day that it turned its key. I came in year 2.5, I think. And it was just a business that had all the right pieces and parts, but they were underfunded and the space was too big. And the manager therefore made a lot of really desperate decisions just to keep cash flow going to cover payroll that were not profit centric.
So with that front, I mean, you could see there was probably no real planning fiscally prior to starting. They had a great concept.
Yep.
They had some ideas. They had a visual. But obviously, there was no forecasting. There was no performer like we touched on earlier. Yep. There was no fiscal plan.
As far as I know, the owner was an engineer and was very savvy and very business savvy. But if there was a pro forma before they opened, I never saw it. And I certainly saw nothing after I went to work for them as the bookkeeper that said, hey, here's what we need to do financially.
Right.
It was mostly the checkbook told us our economic status.
Right. You were just going as a pay as you go.
Exactly. Yeah. And then I left that store when it closed and went to work for Dexter's in Winter Park. And that was a great experience because Dexter was a great buyer. He was a very intelligent man in the way he approached the business of wine, and he cut great deals. He was not, in my opinion, as passionate about wine as my first boss was. He was a lot more of the stack it high, market low, watch it fly mentality, which was great and it worked. But it wasn't satisfying to me. And so that's when I decided I'd sort of had enough after 3.5 years. I really wanted to go back to selling the wines of small family-owned wineries, which is what I'm passionate about. And so I talked to Dexter at that time. He had made an ovation for me to buy in as a partner. My wife was pregnant with our first child at that time, and I needed to make more money, but it wasn't going to come out of that business. So I decided, with what was presented to me as an option to buy in, I could pretty much take the same money, have 100% control, and be my own boss.
Right.
And I say 100% control. I actually had a business partner, finance backer when I opened the store, but he was very much ask me when you need me, but you run the show yourself.
So when you started the industry and you got in a specific sector, you were in wine. What was the wine industry looking like at the time?
So in the mid 90s, wine was popular. It was just on the backside of the French Paradox piece that was on 60 Minutes a couple years earlier. So wine was starting to become something that was more of a beverage for people as opposed to beer or spirits. And so we'd had a bunch of independent wine shops open up in the area. There were a lot of stores that did one thing and they added a wine section. And so my competitive set at that time was about, there were probably 20 independent retailers around the greater Orlando area. And then with that, we also had ABC, which had rebranded a couple years earlier from ABC Liquors to ABC Fine Wine and Spirits. So they were taking a much more aggressive approach to wine as well. And then the Total hadn't moved into the market yet. Bevmo, which was making waves on the West Coast, hadn't come to Florida yet. So it was more of an independence market than it was
Box store,
today. Box store.
Chains, yeah.
Costco wasn't relevant. They had stores in Florida, but they weren't really as penetrating as they are now. So it was much more competing against independents than it was about big boxes at that time.
What was the biggest risk at the time when you started that industry or your own business? What was the
it was the initial investment because and that's one of the reasons why I was 27 years old when I jumped off the cliff and opened my own store, 28, and that was very much because we had nothing to lose. And my wife was very adamant that she said, if you ever want to do this, and my wife's not a risk taker, but my wife said, if you really want to do this, now's the time, because what do we have? We have a house in East Orange County. So
you had low debt. Yep. You weren't really concerned about liabilities.
Nope, exactly.
Now, it's interesting you brought up the box chains. Mm-hmm. How have you're 30 years now, and like you said, you've done the ebb and flow of the industry. When you started the industry, that was independence, and then the box chains have pushed heavily to get in those industry. How have you been able to maintain such a successful practice in lieu of your competition having deeper pockets, right, and bigger assets? So
our industry has gone through immense consolidation since I came into the business. And as a result, what's happened is there's a distillation, pardon the pun, of volumetric brands. And so what happens is the big brands dominate the big distributors, which dominate the market, and they're only focused to sell those big brands. There are small distributors who sell smaller brands, and that's very much always been my focus. So what we always say is, when you're tired of the store set at ABC Liquors, or you've run through all the private labels that Total sells, or you've run through the bins at Costco, and you're ready to drink real wine because you just realize that all those wines taste the same, that's when you usually find Tim's Wine Market. And we don't really market outside of our own little biosphere. We market to people who find us, but we don't really go out and find people. We don't do a lot of marketing to say, hey, come visit us, because 99.9% of the wine drinkers out there aren't our customer yet. They may get there, many will not. But we just realize that our competitive niche is focusing on those small family-owned brands, where quality is the goal, not hit a price point.
So if I understand correctly, and this reminds me of a really good book that I'd recommend our audience, especially business owners, look into. It's called Blue Ocean.
That's actually, I wrote a whole study on that book.
Yeah, that book's phenomenal.
Yeah, absolutely.
If you're starting a small business, because it gives you the wherewithal to look at, what, I may not be the biggest, but I'll be the best in a sector that's not competitive.
Yeah.
So wine, as you alluded to, is a competitive market, but you had to get into a niche area in that industry, i.e. Blue Ocean, that really wasn't competitive. So that way you could have an audience that doesn't get saturated by the larger groups.
That's exactly right. If you look at the wine industry, roughly 85% of all of the sales of wine are consolidated around about 120 brands. So it's a very, very high concentration of sales of not that many wines, but it leaves open. I mean, there's over 19,000 wineries in the world. So that leaves a wide berth for somebody who's willing to put into work, find things that are unique, learn what makes them interesting, and then also have the capacity to sell them, which is part of, I think, one of our great secrets is we're good at marketing. We're good at, once we find something, really trumpeting it to our customer base.
Do you think, as an entrepreneur, one thing that did benefit you is patience, because you took the time to sort of understand the industry, therefore you could then pivot and determine what is underused or undervalued and how you can put your market in that area?
Yeah, I think that's a good synopsis. I start every morning reading 5 newsletters, mostly industry driven, and trying to understand not just what's going on in the current environment, but try to read the tea leaves of where things are going. We've pivoted and moved for years through different aspects of the wine business. And we're very successful because I think we're always leading our customers. I always like to say that we're 2 years ahead of what the average customer is thinking about when it comes to wine. So that when they read an article in the New York Times, or they read an article in the Wall Street Journal or Wine Spectator, and they come in and go, "Have you heard about these wines?" "Yeah, I got 5 of them." It's a section we actually did a tasting on them 3 months ago. It's something where we really try to stay ahead of that curve.
So again, what we're highlighting here is an entrepreneur needs the energy, frankly, and the initiative to see ahead of the curve, but constantly evolve. I mean, one of the things you'll understand about business cycles, and you just alluded to it, most business cycles at a 7-year window have to evolve. A company won't survive after 5, 6, 7 years if it doesn't do some kind of modification.
Absolutely.
So regardless of wine, and we're using wine as a sector, but it's really indicative of anybody opening a small business. You're very, very limited in capital. You don't have the resource of box chain, and you've got to be able to evolve quickly. And that's also a benefit, because a lot of big organizations are like tankers. They can't move real quick. Small business is very nimble. What are some of the things that you feel that the box chains are misunderstanding about customers?
Right now, the whole industry is trying to figure out why younger generations aren't drinking. And their focus is completely wrong, because they're used to selling to boomers and my generation, the Gen Xers, and saying, okay, it's about price, it's about value, it's about getting it. And that's not what this current generation is about. The current generation is much more about experiential. They're much more quality centric. They would drink less, but they would drink better. And we over and over and over again see my Gen Z, my millennial customers coming in, and they, the conversation always starts with, "I did study abroad in Barcelona. I did study abroad in Florence," or, "Oh, my family has been to trips to here and there." And they want to know about the farmers. They want to know how the grapes were grown. And they're really picky. And there's also a truism in the wine business: one generation never drinks what the previous generation drank. And for years, it was categories. So, the greatest generation was primarily a brown spirits drinking crowd. Then we move into the boomers, and the boomers were more clear spirits, and then eventually into wine. The belief with so many is that they're not willing to drink wine, that they want to drink seltzers and all this other stuff. I see that as an option, and as something they certainly are drinking. But they're also really interested in wine if you have the right wines on the shelf. So
again, as an entrepreneur, you can have a great concept, great idea, but if you're not really dialed into the industry or dialed into your group, and that's where the pre-work has to take place. I mean, frankly, you have to know, what's my audience going to be like? What's my comp going to be like? What's my spreads going to be like? What kind of revenue stream am I looking at? How could I expand? Have you ever had a period where you had to pivot, consolidate, regroup?
Oh, yes, many times. That's okay. I would say, you mentioned a 7-year cycle, and I would say at least 7, if not 10 years, we've had to constantly think about evolution. We went through a period, I still have 2 franchises. I had as many as 9 at one point in time. So we went through a period where we tried to franchise and expand our concept as one way to grow. COVID was a whole other experience that was very interesting and positive for the wine business for a period of time. But even beyond that, we were very California-centric when we first opened. Over time, we've become very not California-centric in terms of our selection. And it's mostly because, California, the stories are lost. The family-owned wineries, they still exist, but they're fewer and far between as they've sold out to the bigger brands. So we've had a lot of evolution over time.
Well, and see, that highlights one of the components we talked about, because if you don't have a plan, we stress that all the time. Sit down with a team of advisors, different aspects. But you also have to be able to pivot and consolidate and regroup quickly. If you just stick with a bad idea, and you've seen a lot of your competitors do that, what happens?
Yeah, they don't survive.
They don't survive.
And, you see that. I'm a big believer in writing a business plan, and if you don't have a business plan, if it's just, hey, I'm going to hang out a shingle and sell some wine, you're not going to make it very long. And I've watched, I think one of my former managers kept a list, and I want to say it's well over 50 locations have opened and closed in the term that we've been in business.
See, that's incredible. Well, but that comes back to what we try to tell entrepreneurs. You have a strategy and then have a contingency. If you don't have a contingency, you're just going to go out there. Now, it's good that you were able to do it in an environment where you had no liability. But unfortunately, a lot of the entrepreneurs that are probably tuning in our show are a little bit older, and they may have some liability. So I really recommend them get a tax counselor, get a planner, get maybe someone a sector specific, inventory, sales, retail rep, whatever, and start to gather data before you go to market and put your life savings on the line, because there's a lot of graveyards out there. Now, I had another question in regards to what is the way to balance quality with inventory and sales? How do you do that so that you make sure that you're not compromising on either?
It's such a difficult task. Particularly because we're cyclical too. We're busy in the first quarter of the year.
So let's stop on that one second. Explain to the audience what cyclical means.
Sure. So we don't have a consistent sales every month. Matter of fact, I always tell people, when I'm talking to customers or people, I'll just say, January is usually X, and that's about how much we're going to sell in a month, pretty much through the year. Okay. January, February, March, April, and most of May, we sell X almost every week, no matter what we're doing. Yeah. Then we get to June, and we'll lose 10% of our revenue in June. July, we'll lose 15 to 20%. August, we'll come back to only losing 10%.
Yeah.
September is usually down 4 or 5% off of X. And then October starts back to X.
Right.
November is 1.5X, and December is 2X.
Right.
And it's very consistent over 30 years. That number stays pretty consistent.
Right.
So one of the challenges we have is we have a footprint. We want to keep it looking full. My goal is to always make us look full, even if in July and August it doesn't necessarily make sense to have the same level of inventory. And so that's always the trick: is you're tasting wine. I'm tasting 4,000 to 5,000 wines a year to make quality decisions based on, is it a good value? And there's very few wineries in the world that make wines that are utterly unique. There's always a peer set that I have to compare them to.
Right.
And in the summer months, I may say, look, I have 3 wines from the Minevois Corbière area. For the month of July, I'm going to run with 1, and we'll run through it. And if we need it, we'll reorder it. And then by October, I'm starting to say, okay, now we can come back and add a couple more SKUs in that category.
So the data points you used for inventory, as you referred to cyclical, how long did that take for you to get those data points?
It's very intuitive for me, more than it is something a report spits out.
Right.
But I think it took me about 4 or 5 years to really kind of understand, what we needed, when we needed it. And again, we've pivoted several times through the 30 years we've been in business.
Right.
So there have been times where I've said, okay, we're going to make a change. And now's a good case in point. We shrunk the size of the store from 2 spaces down to, or 2,400 square feet down to the original 1,285 square feet. And so I really ran our inventory down, so we had less inventory to move.
Right.
Now I'm slowly building up, but I'm really watching the weekly sales and saying, okay, this category is red hot. Let's add more to that category.
Right.
This one we still haven't sold much in. Let's not worry about it right now.
So what that highlights to our audience is that if you don't have the proper capitalization or the resources, you're talking 2 to 3 years before it takes you to really hone in your business model.
Easily, yeah.
So you got whatever the sector is, I don't care. That's why I said it's a 7-year cycle.
Yeah.
But a lot of times we've seen this where people come to us after the fact. They've had the business open for a year to two, and now they're asking us to help us how to keep it solvent.
Yeah.
And that's like, a catch-22. You can't run to the SBA for a loan at that point because you're undervalued and not going to give you anything.
Yeah.
The big retailers misunderstand the consumer, and you highlighted that before. Are there any things as it relates to the business you opened, regrets that you've learned now over 30 years, you wish you had done it this way or that way?
It's probably more my management style with regard to my employees and the expansion we've done. I opened 3 company-owned stores at one point in time. I probably would not have gone back and done that if I had, hindsight being 2020. I've always invested heavily in my employees. I'm happy that I did that. I probably at the peak times would have maybe dialed back on my ambition of how many employees I've hired. And only one time I've ever had to lay off an employee. And that was at the bottom of the recession in 2008. Every other time they sort of self-regulate. About the time I look at the
about the time you need to get rid of them, they quit.
Exactly. And part of it's their frustration too, that they'll come on with this idea, I'm going to make this much money.
Right.
And when times are good, they're making that much money, but when times are not, everybody gets bonused on a profitability basis.
Profit share.
And so at that point, it's not as lucrative for them.
Right. Well, again, that's something for our guests to understand. Employees are probably 80% of your cost. I mean, they're very high. That's in any company, that is going to be the biggest cost and the biggest headache. Retention, turnover, training, the list goes on and on. So I say that because I know I have a lot of viewers and listeners that are excited about, hey, I've had this great idea. I know I can do it better. And you probably can. But without proper planning, and without any kind of real staging and understanding what you're getting into, you might just get into a successful case of stress. And then all you do is have stomach ulcers for 10 years and you quit.
I would even say I was young enough to know what I didn't know when I opened the store. So I had a group of successful entrepreneurs who I went to and I said, here's my business plan.
Right.
I don't want to hear pretty stuff, blow holes in it for me. Tell me where the problems are. And so I was able to kind of garner that experience and use that in my early days to see, where thoughts I would have gone down. They said, no, that's not a good path to go. And I talked to several because I wanted consensus. I don't want consensus. I wanted everybody's opinion. And then I formed my own consensus about what they said.
So basically what you're looking at is you get a group of advisors. And if you remember, Tim touched on 2 things. One, we mentioned the pro forma. If you haven't created a pro forma, you need to. It's a fiscal blueprint. The second is a business plan. And what I see a lot with entrepreneurs is that it's just their nature. They have a lot of energy. They're very excited about it, but they don't want to sit down. It's almost like they have ADD. They don't want to sit down and do the structured part. So if you're not strong in that suit, get a group of team members. Go to some people, sit down. But remember, on Watch Your Six, we're always, reiterating that you want to have an advisory group, an individual group of people that are professionals in their sectors so that they can sit down with you. You can sit down and construct a plan, and you can sort of punch holes in it or review it or edit it. So that's really good.
Absolutely.
If there was one thing you wanted to leave our audiences with as it relates to a small business, what would it be?
You're never going to have enough cash. You're always looking for cash. And you may be really successful and growing, but you will hit these plateaus where you say, okay, the sales are great. We don't have any money. Why is that? And you have to, at that point in time, take stock and recognize, okay, maybe I'm a little heavy on inventory. Maybe I'm a little heavy on labor. And you have to realize what those are. And then you have to have a plan to push through it. My industry is going through, at the distributor level, rounds of layoffs right now at the distributor level because sales are down and they're trying to figure out what the next path is going to be. And while I understand that, there's also opportunities. And if you're laying off good people simply because you're saying the numbers don't justify this kind of payroll, and you're maybe letting some old war horses that aren't really performing to that level anymore, aggressive level anymore, you're making a mistake. And you need to recognize that in your own business and say, sometimes you just got to push through these things and figure out what you got to do to grow forward.
I mean, there are cases, you hit it on the head. There are cases where companies I know of were undercapitalized and they pushed through it and then they finally got the mother load, so to speak.
Yep.
But capitalization is probably the critical part. We see that with individual clients too. They make $1 million, $2 million, and they don't have any money to spend. And it's usually fiscal irresponsibility. There's no budgeting. There's no oversight. The list goes on and on. So I strongly recommend, whether it's an entrepreneur or as the individual investor, whether you're wealthy or not, sit down with your team, get with your team, make sure your team understands, and they can highlight some of the deficiencies that are probably showing up. Anyway, thank you, Tim, from Tim's Wine Market in Orlando, Florida. Hopefully people come out and see you. We look forward to seeing you next week on Watch Your Six. Remember to go to thejasonedwards.com. That's thejasonedwards.com. We've got our new free ebook out. It's got all the financial data we've talked about in previous shows, so go get your free copy. We look forward to seeing you next week. And once again, I'm Jason Edwards with Watch Your Six.